Hey there, savvy investors and financial enthusiasts. Welcome back to OnlyStocks, your go-to channel for unlocking the secrets of the stock market. Today, we're diving into a topic that's both exciting and potentially life-altering. Imagine having $100,000. Now, imagine investing that in real estate investment trusts or REITs. Sounds intriguing, right? Well, buckle up, because we're about to explore how this move could significantly transform your financial future.
Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys.
Let's rewind a bit and talk about REITs. These aren't just any investments, they're like hidden gems in the capital market. Historically, REITs have been outshining giants like the S&P 500. We're talking about a whopping 15% average annual return over the past 20 years. But what makes REITs so special? It's simple: cash flow from properties, growth in cash flows, and smart reinvestment strategies. These factors combine to create a powerhouse of potential gains. Now, some folks might label REITs as dull retirement stocks, but that's a huge misconception. In reality, they're dynamic total return vehicles. Let's break it down. Yes, the dividend yield might seem modest, hovering around 5%. But the overall cash flow yield from these properties can hit 8%. Add in the annual growth in property net operating income, NOI, and you're looking at a recipe for impressive returns. Picture this: a group of self-storage REITs averaged 18.8% annual returns over 28 years. That means a $100,000 investment could have ballooned to over $12 million. Now that's what we call life-changing. And here's the kicker: REITs shine brightest post-market crashes. They're currently at their most attractive valuations in a decade, setting the stage for potentially even greater returns in the future. Let's delve deeper into the remarkable resilience and potential of REITs, especially in the context of economic fluctuations. Post the 2008 financial crisis, we witnessed something extraordinary. REITs didn't just recover, they soared, nearly tripling investors' money in the following years. This wasn't a fluke, but a testament to their inherent strength and adaptability in the face of economic turmoil. Now, fast forward to the 2020 pandemic crash. Once again, REITs demonstrated their remarkable resilience, more than doubling investors' money in just over a year. What's driving this incredible performance, you ask? It's a combination of several factors that position REITs uniquely in the investment landscape. Firstly, let's talk about valuations. Today, REITs are back at those 2020 crash levels in terms of valuation, presenting a similar opportunity to what savvy investors saw post-2008. However, the fundamentals of these REITs are stronger than ever before. We're seeing low leverage across the board, which means these companies aren't overburdened by debt. This is crucial because it gives them the flexibility to navigate market uncertainties more effectively. Next, consider the maturity profiles of their debts. Long maturities on their liabilities mean that REITs aren't pressured by short-term fluctuations in the market or economy. This allows them to plan and execute long-term strategies without the looming worry of immediate repayments, contributing to a more stable financial footing. And let's not overlook the impact of inflation. In periods of high inflation, as we've seen recently, rents and property values tend to increase. This is inherently beneficial for REITs as it leads to growing rents and subsequently stronger cash flows. This inflation hedging characteristic of real estate investments is a significant factor in the robust performance of REITs. But that's not all. REITs are also evolving with changing market dynamics. They're increasingly diversifying into new and lucrative sectors like data centers, cell towers, and logistics facilities, driven by the digital transformation and e-commerce boom. This strategic diversification not only enhances their growth potential, but also provides a hedge against sector-specific downturns. So, when we look at the current state of REITs, we're not just seeing a repeat of their post-crash surge. We're witnessing a sector that has learned, adapted, and strengthened over the years, standing on the cusp of what could be another significant growth phase. For investors understanding these dynamics, the current valuations of REITs might not just be an opportunity, but a gateway to potentially substantial returns in the coming years. Why the recent crash in REIT prices, you ask? It's primarily due to a shift of capital from REITs to fixed income, chasing after higher yields. But here's where it gets interesting. With inflation coming under control, we're likely to see a reversal in interest rates. This could funnel capital back into REITs, sparking an epic recovery. Many high-quality REITs are now offering tempting dividend yields between 6–8%, with prospects of cash flow growth between 3–5%. Combine that with potential price appreciation, and we're looking at an opportunity for 15–20% annual total returns in the REIT sector over the next decade. Imagine turning $100,000 into over $440,000 in 10 years with no additional contributions. That's the power of smart investing in REITs. Now, let's explore the different flavors of REITs. Did you know there are several types? We've got equity REITs that own and operate income-generating real estate. They're the big players in this field, dealing with everything from apartments to malls to hospitals. Then, there are mortgage REITs, focusing on income from mortgage financing. Each type offers unique opportunities and risks, but the diversity is what makes REITs such an interesting investment. Let's talk dividends, the heart of REIT investing. REITs are required by law to distribute at least 90% of their taxable income to shareholders as dividends. This makes them some of the highest dividend-paying stocks in the market. But it's not just about high yields. It's the quality and sustainability of these dividends that matter. A REIT with a track record of consistent and growing dividends can be a golden ticket to steady passive income. Incorporating REITs into your investment portfolio can provide a hedge against inflation. Since real estate often appreciates in value over time, it can offer protection against the eroding effects of inflation on your investment. Moreover, the diversification that REITs bring to the table is invaluable. They typically have a low correlation with other stock sectors, meaning they can zig when others zag, providing stability in volatile market conditions. Interest rates play a pivotal role in the performance of REITs. Generally, rising interest rates can pose challenges, as they can increase borrowing costs and affect profitability. However, this is where the quality of a REIT's management and their ability to navigate through such economic climates becomes crucial. A well-managed REIT with a strong portfolio and healthy balance sheets can still thrive even in a rising interest rate environment. Understanding REIT valuations is key. It's not just about the price of the stock, it's about the value of the underlying real estate assets. One common metric used is the net asset value, NAV, which provides a snapshot of the REIT's intrinsic value. Comparing a REIT's share price to its NAV can give you an idea of whether it's undervalued or overvalued. This kind of analysis is what separates savvy investors from the rest. Looking ahead, what's in store for REITs? Market trends suggest a growing emphasis on sustainability and green buildings, which could open new doors for innovative REIT investments. Additionally, the rise of e-commerce continues to boost the demand for industrial and logistics properties. Keep an eye on these trends, as they could significantly influence the REIT market and your investment decisions. As we navigate the exciting world of REITs, I want to hear from you. What are your thoughts on investing in REITs? Do you have any experiences or tips to share with our community? Drop your insights in the comments below. Let's learn and grow together in our investment journey. And there you have it, folks, a deep dive into the dynamic world of REIT investing. Remember, the path to financial freedom is paved with knowledge and smart choices. If this video has sparked your interest in REITs or brought new insights, show your support by liking and sharing it. Don't forget to subscribe to OnlyStocks for more empowering content that helps you make informed investment decisions. Thank you for watching, and until our next financial adventure, stay smart, stay invested, and keep growing your wealth.